Welcome to Stephen Johnson Stocks from Newcastle, England. A little bit sunny outside, and a little bit healthier. Obviously, more exercise, better food, less alcohol, stuff like that. So, doing well. I think it's about 5.86K a month in August, transitioning into trading full time, which is pretty cool. What we're going to do, I'm just going to take you through some trades, basically how I'm doing, how the month was, and basically the setups that I play and why I play them, and yeah, we'll see how things transition. So in terms of the month, and I think we'll just go full screen just because I think it's going to be a bit easier for everyone to see. In terms of the year, it's basically 38,000 up. Make sure we're good. Yeah, 38,000 up. January, February. In March, we're like pretty solid. Like I made about 7K in that quarter, 6.5, something like that. And April, May, and June was a bit. Second quarter was a bit more of a boom with like made 23,000. And then the final quarter, well, this is the final quarter of the year. I'm starting this month on a really bad loss. Not normal. Potentially, I mean, if this is a red month, it's a red month. You see, I've got a discipline journal in place after this result, but in general, I mean, look, I give back a month's profits, which is worrying, but I've got the full month to get this back. So this month could be a red month, maybe 10 out of 12 months, 10 months green, 2 months red, or 9 months green, 3 months red. But overall, I'm the way I'm going, I'm pretty positive I'll make at least 50K this month, 50K this year, sorry. And then that's a nice springboard because I made like 1,000, 2,000 last year to sort of make 50 this year and 100 next year. That's really solid. So yeah, September, we'll get into this. We'll do this recap, but very bad start. Combination of things I'll address in a different video. In terms of the month, yeah, though, like no red weeks. 2 big losses, but nothing terrible. I mean, I had a couple of bad losses in July, and that's the encouraging thing. Like I took this 4 grand loss at the end of July, and I still come out 7 grand up. So to take a 4 grand loss in the start of September, like there's no reason why I can't still end up 5, 6, 7 grand up. It's just that this happened at the start rather than the end of the month. But really, in summary of August, just did well. You know what I mean? Like won 76%, lost 23%, average win 850, average loss 1,100. Need to get me profits above me losses, but other than that, that's kind of it. So other than that, let's just go through a few trades. SSNT was on August 4th. Let me just check what I made on it. We'll go through. I think it was about $300, $400. But anyway, let's just go through because I don't have it at hand. But SSNT on August 4th. We can see that it's an interesting one because like you've got this big gap. It's up to 52-week highs. Usually when stocks go to 52-week highs, it's a bit of a warning sign. Like I've actually got, if we look at gap and craft patterns by daily, and I'm giving a bit of extra free information here that I don't normally give away. But if we look at the data on gap and crafts by 52s, and there's still a lot more work to do on this. But of the ones that I've tracked, stocks that gap on 52-week highs, generally there's a consensus that 20% of them go and 50% of them will hold. So the vast majority run a hold. Not many of them really fail. So with this one, there's a chance that it's not going to really fail. Volume's high, it's 52. It's a bit scary. It's not scary, but you've got the chance that it's a bit worrying. And this was on the day of SSNT. So I only made a couple of bucks. I obviously played it wrong, but it's a good example, so I've kept it in. So if you check SSNT, I mean, look, it's one of those things where we can see on the daily it's 52s. You've just saw the data on 52s, but it immediately breaks down, and you've got this tiny little volume, and it immediately breaks down. So this short on VWAP, the add on VWAP as it fails, covering down in the eights, like you can see this. I took it long for whatever reason, because it's like, oh, 52-week highs tend to run and might squeeze. But ultimately, nah, look, it's dead light volume, couple of 100,000 a minute, did nothing pre-market, straight fail, weak action intraday, and then you've just got the wash. And that for me is, and you've got some kind of higher lows here. It might pop, but ultimately, I wouldn't be taking it up here. It's a bit too scary. I mean, this area here, it's hard to find the top. If you really want to short the trend break around here, you can. But your safe entries are here and here when there's no volume. You can tell with the high volume chalks, it's like trying to break out all the time, and the level 2 is going crazy. And the level 1, the time of sales is going crazy. But this is just a very slow, this drip at the end is just a sign of quick VWAP short, and you've got your covers along here. And it's SSNT is a really good trade. It's an example of a 52-week gapper that will fail, because there's many that won't. I'll tell you what, I'll go straight to MCRB next, because MCRB was a 52-week high that did run. I want you to see the difference between SSNT and MCRB. So MCRB lost around 1100 on this, and it's the opposite. Like you see the big volume, and I think SSNT had pretty big volume as well, right? Yeah, I mean, look, they both had blowout volume, but the difference is in the daily. And if you look at the daily on Mcrib, we go back a month. This isn't just falling nicely. Do you know what I mean? Like you've got to pop, you've got to break out the new highs, and it's holding, and it's popping up again. And even Mcrib, it didn't push too far at the open. But if you look at SSNT, the difference is all in the intraday. So with SSNT, it pops, and it's just an immediate slow fail on about 8,000 shares a minute. But if you look at Mcrib, I have to go all the way back again. Yeah. If you look at Mcrib, trading about 150,000 a minute. So did we just see 8,000 a minute? And on this, we're trading like 200,000 a minute. So the major difference with Mcrib and SSNT is they're both 52-week high gappers, but Mcrib, this chart is going up, SSNT's chart is going down, and the volume on Mcrib is very high, and the volume on SSNT is very low. Now with Mcrib, it was a lesson. I don't know what I'm playing at, shorting 52-week highs with high volume. SSNT, even with lower volume, I was still scared to take that short. But with Mcrib, see if I can find me profit and loss on this. Yeah, with Mcrib on the day, I took $180, but I think that's down about $1,000 on it. And Mcrib, again, it's like you just can't be taking these. The volume's too high. It's 52-week highs. It's $20 stock, but the dollar volume's too high. This should have been a total avoid. I don't know really. I mean, this is not a type of play I'll ever do again, just like I'm not short. So pennies again, but this, I don't think, is an acceptable short based on the pre-market volume and the dollar volume and the 52-week high. I think maybe take a lower high, maybe leave it 15 minutes, but you've clearly got higher lows, wedge, break of the wedge, nice buy, and then you've got your rip all the way up to 32. So this stock, if you buy the break of the wedge, you've got from 20 to 30. It's a 30% move, and it still comes down and holds the entire day. So even if you short that, so you basically 52-week high stock trading this much volume, 203,000, 300,000 minutes, 1.4 million at the open, which is huge for a $20 stock in terms of dollar volume. It's just an absolute no-go at any time. And even if you look at Mcrib, if you'd shorted it on day one, it consolidates in the next leg up as well. It's an interesting when it holds here to buy this breakout as well. I'm actually quite curious. If you look at this on 15s as well, It never does break out, but it always holds the level. But if you play this over 2 days, you've got this kind of wedge breakout as well around this. See this? You've got this. I mean, there's a wick here. I'm going off the colored candles, but you've got this nice wedge to buy off on the daily. So you've got the pop, the higher low holds the wedge. You're buying in the 20s. And then you've got this move back up to like the 30s. So there's like 2 opportunities to buy and get 30% on this. It's very curious. I mean, and if you want to look at the wedge maybe another way, say we do play it from the top. Let's see how that wedge looks. Play it from the top. Yeah. Got this daily wedge. And if as long as it holds the opening price as well, you've got from 19 to 30 as well. So 2 good examples of SSNT and MCRB. The next stop we're going to look at is MYOS, and it's one that I kind of messed up. So MYOS, I almost made that mistake, 1 second. MYOS is a classic kind of gaps and fills, gaps and fills, gaps and fills. But one time it got enough volume that it ran, because this is a gap and fill on like 20 million, but sorry, arrow tool. It's a gap and fill on like 20 million. And here you've got a gap and fill on, what's that? This is a gap and fill on 30. As soon as it gets something like 200, good chance of running. Of course, it fails the next day because it's MYOS. It's a shitty stock. What I care about is these shorts into high volume resistance trades where you've got a 200 million day where you've got people buying from the 2s to the 4s. So you've got people in an average of 3. Then there's no volume since. So everyone's in the water in the 3s, 250s, 220s. So on a day, it trades lower volume than the high volume day. You've got all these people bagged. So it's quite likely that all of these people are going to sell and everyone else is going to sell because it's a shit company, but there's not the demand to push it up. So with MYOS, it was quite an easy short into a higher volume level of resistance as a trade. And you can see, yeah, pre-market, they can gap it on light volume, but as soon as the open comes, you've got a small push and a fail. My mistake with MYOS, I didn't make too much money on it. My mistake was thinking, it's going to come down, and I shorted a bit early, a bit too much size, and then I panicked at the opening cover and then re-shorted weakness, which is a bad way of trading, and I really got this wrong, but I did all right because it's such a bearish setup that even if you get it wrong, you'll still make money. I mean, maybe I've got me profits here. MYS, I only made 160 bucks. I actually made 600 on WLL, taking 20%. But with the likes of MYOS, I covered when I was meant to short, and I shorted when I wasn't meant to, and I still made money because it's such an easy bearish setup. The trade I want to talk about is a little bit later in the month, and all of these trades have carefully been selected because they're linked together. So AESA is kind of just the same. It'll be on this day here on the 19th. It's the same thing as MYOS, but I'd like to think I got this one a bit better. But actually, no, there's a difference between the reason I've selected MYOS is because on MYOS, this and this were the other way around. This was the big volume candle. This was the lighter volume candle. So this is still a bearish setup, but it's a bit more of a bullish setup than MYOS. And the difference is MYOS went parabolic and came down. AESA went parabolic and came down. The difference is a lot of the bag holders were stuck here and they didn't really get a chance to get out. And but in this circumstance, it says 15 million float. There's 140 million shares traded, so that's a lot of time for the bag holders to get out, for the float to rotate a bunch of times. Whereas on this day, so this volume is bigger than this volume, which means there's more of a chance that the bag holders can get ironed out and it can push higher, if not run. Now, again, if I can give you guys a bit of a freebie, and I will. My job on this planet is to help those. If I can give you guys a bit of a freebie, let's just have a quick look at my data on GAPAs. I've got so much different data. All gap preps by daily. If you look at these lower volume GAPAs, you can see it. The vast, like you can see, like just in the last couple of months, I've made 11 grand shorting this type of pattern and only lost 2.5. So made 8.5 grand on this pattern just in the last like 2 months. And that's because pretty much 80% of them fail. But it's still risky, like still 1 in 5 go. From the data that I've checked, I've still got to build that data over the next few months and back test as well. But with AESA, like it's still going to fail, but it might not fail as easy as MYOS did because there's less bag holders. It's simple as that. So with AESA, and we'll go to the minute, you did get this pop, but then it kind of made a comeback. So it was kind of it wasn't one of the 5. It was one of the 5. It's one of the 5 that basically didn't break down. It actually held. And with AESA on the minute, just to check the trades, let's just check the daily to see what I made here. Yeah, I made $140 on this. I actually lost 1.8 on Nmtr. We'll take a quick look at Nmtr. I missed it. Since I took the loss on it, we can take a quick look. But AESA short pre-market because it's likely it's going to fail because of this resistance level. You don't like the volume is looks at like what's the volume pre-market? Have a look at it on a minute by minute because we were saying before with SSNT and MYOS, SSNT was trading like what, like 30,000 or 40,000 a minute compared to whatever it was. I can't remember compared to MYOS, which was like a couple of 100,000, 300,000. Well, AESA volume was again like 50,000, 60,000. So sometimes it was 100. So it's not on the level of what I can remember as whatever Mcrib. Yeah, Mcrib was the one. It's not the volume of Mcrib, but the thing with AESC is like, yeah, you've got the pop, but when you've got high, lower high, you've got this like downtrend pretty much all the way to the open, and you'll get a small pop at 9:30. But this is typical characteristic behavior of like a pretty bearish chart. When you look at the daily, and it says it all, and it's underwater, and this could still be a bag holder chart. You don't know how much volume is going to come through here, but in the morning it certainly looks weak. So I don't mind at all the shorts. I don't mind the shorts here at all. Catching the lower high. Quick cover before the open, takes them off. You never know what's going to happen at the open. Short, cover. And then when it reclaims VWAP, obviously you see the volume coming in, the 2.6 million candles. Look, it's just one of the ones that didn't really work, but because I traded it safe, because I got out early and I skipped the double bottom. You've got a double bottom here. That's a bit of a double bottom here. That's a bit of a warning sign. What the? One sec. Anyway, we're gonna do it. Yeah. Bottom, higher, low, higher, low. And then of course it's away. And the only way to and look, it's still a bearish chart. It's still a downtrending chart. So what I would be looking for is like this kind of trend. You've got one trend break, yeah, didn't work. So then the next trend break, yeah, when this trend break works, you've got the confirmation of the lower high after, and then you've got a straight trend down. So like, look, yeah, it reclaimed VWAP up and ran, but don't leave the stock there. Look for the trend break. On the way down, you've got from the 270s, cover when the trend breaks, to the 2s basically. So when it reclaims the 2s, you've got 70 cents on a $2 stock. So 270 back down to 2 if you hold the trend. I mean, you're looking at 25% on that move. It's a really, really solid trade. I can't remember Is it Nmtr? I don't want to waste time because we're going live. Was it Nmtr was the loss that I took? Yeah, Nmtr, I'm pretty sure was the trade that I didn't plan on talking about, but we saw the loss pop up. So I thought I'd bring it up. It'll be on this big gap in day here. I remember the trade. So basically here again, it's a short. There's some resistance here, but I was thinking, but this is where I went wrong here is 8 sub penny, and that was what my big 5.5k loss was on. So I don't trade them anymore. They're a bit too unpredictable. But it's a breakout, yeah. But it's also a short into resistance, yeah. And it's somewhere mid range, I guess. But with Nmtr, what fooled me, I guess you could say, would have been on this. The pre-market chart is like, but the thing is, everyone shorts sub pennies, right? Because they're all going to zero, is the belief. So when I take some shorts in the 92s, add into the 88s, cover a little bit, yeah, sub pennies can rip, and they look like quite good for trend following. It looks like people are trend following these because it's a really nice trend up. You've got from 80 to 113, and I took about 1100 loss because basically I just didn't cut the high of the day break. Probably added, and I've done this a few times, and it's just one of those things. I'm not shorting sub pennies anymore because they're not, for me, it's not a profitable enough strategy. Maybe I mean, I took the $5 loss, but even before that, I'd only made 2 or 3 grand, and messing around with these, and the commissions are through the roof. A really interesting trade next to talk to you about is a long, and it's Tesla. So let's have I've been flirting with the higher price. I've been doing all right with them. This will not really be reflected because they've just done a split. I can only really show you the daily on this because they've done a split, so I'm not sure how it's going to affect. I'll just show you the trade I took. So with Tesla, this is on the 20th. So where's the 20th? Yeah, I can see it actually. Okay, so stocks 52-week highs, and if you think, look, the stocks, the electric vehicle sector is hot, Tesla's hot, it's about to do a 1-for-5 split, which is bullish, a 5-for-1 split, whichever. And you're looking for your entry. Now, I was looking at this and I was thinking, look at this like flag. And I think this is something Dan Irish looks for. I mean, it's basic chart reading that people have done for years, but Dan Irish does it really, really well. When you've got this flag break on the daily, and then if you look on Tesla's 1-month chart, the move was the 20th. What I spotted was if I just draw a candle across, you've got this kind of flag break, and maybe we can see it clearer. On this chart. So it's easier to see when you haven't got the hindsight, but it's just, I was looking at this and I was like, oh, here's a flag, and the flag's around the 1900s. So when it broke, and then here's the flag intraday, this little yellow line. See this little yellow line? When it broke the flag on the daily and it broke the flag on the intraday, I just immediately bought, and if it falls back through the flag, it falls back through the flag. So I was in the like 1880s. I was out and I took like $20 a share on it, and it actually went from 1880 to past 1980. So I actually missed $100 a share. But I mean, who's to know that's what's going to happen? But it's the same thing. You've got this flag around the 18. You see, I bought around the 1880s. It sits, it like breaks the flag and then it sits on it. So again, it's around, and it's around here. When it broke this flag around 1,800, and I can't even see the entries, guys. I'm sorry. But if we went back to the daily look, you can see the ultimate run. I bought around here, and then the run went up to the 1990s and on. The last trade is EYPT. that I'll talk to you guys about. Again, there's the same pattern over and over. Downtrending chart, gap into resistance. Sometimes the volume's more, sometimes the volume's less. Looking for weak pre-markets. With EYBT, let's actually just go straight to the chart. This is an example of the one that does work, but if you notice the volume was only 60 million, the sub-penny, like, fine, look, you've got your double top here, short as it breaks down, add, short at the posh, and then it fails. The thing with EYBT is the volume's only 65 million, which on a, and this was a $1, $1.50 in stocks. I think it's acceptable to take this one short. It's not like I'm shorting a sub-penny. So the dollar volume's only like 30 million. But if you look at like me big loss the other day, it traded 190 million. So the difference with, say, Schlo, like with this one, it was the same, like pre-market light volume, short. The difference with Schlo is when it pops, even you can add into that short, but when you've got the double bottom and the higher low, you've got to be getting out around the 43 cents range because it actually ran to 75. So it was an 80% run. And that's why these sub-pennies are just a bit too dangerous, because once they get squeezing, everyone chases them and they're really good squeezes, and you think it's done, and then makes new highs, and you're like, oh, I'm even more fucked than before. And then you think it's done down here, and you think, it should come down tomorrow. And then it has one final squeeze before. If I'm still holding, I'd still be down over the next 3 days. It'll be a disaster. So the ultimate lesson for me is, and we'll kind of so the ultimate lesson is, and we'll go over this more in the future, is that stick to what you know. Like I only started trading sub pennies about 2 months ago when my broker allowed us to do it, and it was obviously a bit of a mistake. I don't mind $1.20 going into sub penny, but I even like 90 cents. But you've got to be super careful. Going down to the 30s, 40s, 50s, anything can happen. But at the same time, like, and again, I mean, I don't want to merge this month with last month. So basically, last month, look, was a 6,500 month. Nothing substandard. Some weeks were busy, some weeks were quiet. Main learnings were really dissecting the setups to see what setups run and what setups fail. But like, say I've got gap and crap, but then I've also got like, you've got gap as into 52-week highs, gap as into light resistance, gap as into heavy resistance. So I've started breaking them down more and finding out where I really make the money. So that was a big change probably this month, and it's one of the biggest learning curves in my career. I also looked into sub pennies, and obviously rolling into this month, I found out that sub pennies are a bit too risky, bit too dangerous. It's, I think, just the risk reward's not there. If it can squeeze 80%, but you're only getting 20% on the downside, the risk reward kind of just isn't there, because with these gappers, you'll get a push of maybe 10, 20% really. In this, when these squeeze, I think there's a bit more warning signs, but with the sub pennies, it just squeezes. So it's a bit too dangerous, but overall not too disheartened. At the end of the day, you've got to think. I've got strategies which I've, a couple of my strategies I've, like in the last few months, I've made 20 grand on. And had very next to no low losses. And then stuff like shorting the 52-week highs, I'm learning like, look, half you win, half you don't. Just be careful, and like if it's a clear breakdown on a 52-week high, take it. But if there's a question, you know that a lot of these run, you don't make much money on them, so be very careful. But shorts with the higher volume resistance, you're like, look, you always generally get these. You've never really missed one. Be aware of squeezes, of course, because anything can happen. But ultimately, you're fine to size up with obviously the rule. You've got to be cutting. You've got to be having the rules of third size finding the top in the morning spike. If it washes and goes to higher day, you've got to cut that higher day again. If you get VWAP reclaims 15 minutes in, you've got to cut them. All the same rules, but you can do them with more size because it's a higher odds, more profitable setup. Like, just to tell you, the shorts and the high volume resistance I've made in a few months, I've made 10 grand in profits, and I've only had one loss for $80. So you can see where the setups are stronger and weaker with the lower volume resistance. gap and craps. It's more like lost 2 grand and made 10 grand because they come a bit more often, but they're not as special. So again, like just to wrap it up, the loss is disheartening, but ultimately it's helped me find the path of this really works for me. This doesn't work. Put all your time and effort and excel in this. Leave this alone. And ultimately, I'll end with the analogy of whatever it was that Michael Jordan said and Tim Bourne said on Stocks to Trade Pro the other day. Michael Jordan and David Beckham, for that matter, and whoever else, Michael Jordan will take thousands and thousands and thousands and thousands and thousands of shots in preparation for the main shot in the game. And it's all about just hitting the main shot of the game. But the game is only like that shot is like a couple of minutes. In trading, like the most important time is 8:30 till 10. It's a 90-minute thing, like a 90-minute basketball game or however long the game is. But you only need to show up for an hour, and on the off season or for the less quiet games, you don't even need to be there. Like with trading, a lot of the time, like a lot of September, last 2 weeks, there's no need to show up, but you need to be studying in the background all the time, getting better, so you can kill it and make that big 5K win, big 10K win. For the next 2 weeks, if there's nothing on, it's just to have just don't show up, don't be there. Not for the games, you don't need to be there, just don't show up. Because what I've learned is, and what people have been saying for years and years, to be honest, Sykes and Bourne and Ducks, you'll see Ducks barely trades these days. He trades the extremely high odds setups, and there's just no point trading the rest because they don't have as good odds. You may as well just put your money on the high setups. So what I found is that there's no point in me trying to prove to myself, oh, look, I'm a good trader, I'm a grinder, I can grind this day and that day and the other day. It's honestly better to just show up, say, is there anything there? Nah, there isn't. I'm going to play golf. Because I've afforded that lifestyle by being in Dubai for 10 years, 8 years, working in a good job, doing my YouTube, podcast, trading. I've got myself in a really, really secure position because I don't have kids or anything where I don't have to work anymore. And as long as trading, I know it's a bit scary. I think we've lost $6,000, but $50,000 this year, I only need to make another 12. If I'm making $50,000 this year, I don't need to work for the next 4 months, but I do need to show up for 10 minutes, 20 minutes, 30 minutes in the morning. Is the setup here there? That's going to make us $2,000, $3,000, $4,000. Because now I know what works all the time and I know what doesn't. So it's about not record them, track them, see if anything changes, but I'm not fucking around with the setups that don't give us the good results anymore. There's no point. I'm showing up and I'm saying, if I'm needed to make the fucking award-winning Grand Slam Player of the Year 3-pointer in the final series, I'm showing up to see if I need to make that shot.